Welcome to the Small Business Tax Savings Podcast, powered by JETRO. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello and welcome back to another episode. Today's topic is a panel discussion with the bookkeeping team over here at JETRO. Now, before we get into that, this episode is brought to you by JETRO, a digital accounting firm servicing business owners across the country, helping them relieve stress around financials and saving thousands in taxes. I'm your host and founder of JETRO, Mike Jesowshek. And today we have three amazing bookkeepers on our JETRO staff. We have Chris Gorman, Daud Waziri, and Heather McGregor. And so basically the point of this topic today is to wrap up our All About Bookkeeping series. So for the past 8 weeks, we've been talking about debits and credits, financial statements, bookkeeping, tips and tricks, common mistakes that we're seeing. And so this was meant to be kind of an all-encompassing way to wrap that up and also let you hear directly from bookkeepers themselves. So as part of this topic today, we're going to answer some questions that came in from listeners and also just get some feedback from our bookkeeping staff. So the first question we want to go through and just kind of learn from our panel discussion is, how would you describe the role of the bookkeeper or the role of a bookkeeper, or what is your favorite part of being a bookkeeper? So to answer that first question, we're going to start with Chris.
Okay, so I'm kind of segueing a little bit into answering both kind of together, because I see the role of a bookkeeper kind of being like a financial organizer, and with that being able to put everything and create kind of an overall like big picture, basically taking all of the little pieces and giving the client a understanding and a big overview, which is actually part of what I love doing as a bookkeeper, is ultimately in the end, every month or every quarter, or when the client has a question, being able to really give them a snapshot of how they're doing on a very basic level, meaning it's not as verbose as maybe what a CPA may provide, but just kind of giving them an idea of exactly where they stand.
Awesome. Yeah. And so I think that's a great point, and being able to, have those financial statements and really, I always said, we've been talking to a series that bookkeeping is not just, you can't just do bookkeeping and stop there. It's actually taking the data and results of that bookkeeping, the financial statements, and taking a step further. So Daud, kind of same question to you. How would you describe the role of the bookkeeper, or what is your favorite part of being a bookkeeper?
Yeah, I think one of my favorite things is empowering the client to make decisions. So providing them with a balance sheet that's going to help them make decisions in terms of investments, and then seeing their income statement. Sometimes you can figure out your KPIs, which are key performance indicators. You can do some ratios and really figure out, hey, are my marketing expenses really effective? Is that really bringing in more income? Or am I spending too much on contractors? When I spend more on contractors, what actually happens? And is my income being eaten up by any of my expenses? So I love empowering them to basically make a manager's decision on changes to make in the future. Yeah,
that's excellent. And like I said, that's the key is to take that data that you have and then actually take action on it. And we kind of talked about last week is that's a big thing too, is making sure that we're staying up to date with bookkeeping. So if you're doing bookkeeping once a year, it's very hard to make those management decisions that you're kind of talking about when you're only doing it once a year.
Absolutely.
And so Heather, same question to you, kind of how would you describe the role of the bookkeeper, or what is your favorite part of the bookkeeping aspect?
My favorite part is probably just the problem solving aspect of it, and seeing all the data that comes through on a monthly basis, and depending upon however it comes through, whether it's, old school receipts and register tapes, or is it, the information that flows through like something like a zero bank feed, taking that and putting it all together where it needs to go. And then you have this beautiful picture, and you get these reports that you can use for whatever you need for your business. I think that is the problem solving and like the puzzle aspect, and getting it to that pretty picture is my favorite.
Yeah, that's it. That's a good way to talk about it. There's another staff member on our team that kind of looks at the bookkeeping and even the tax side as a puzzle that you're kind of putting together, because there's sometimes where you have all the data, but you're missing something, and that could be a loan, that could be an asset, or something that is just kind of missing from the picture. And as a bookkeeper, a lot of that stuff on the back end is kind of looking into those specific things and saying, oh, we're missing, a loan document or a purchase document to put that on the books.
Can I add one quick thing?
Yeah.
I also really consider bookkeeping. I mean, I almost consider like the whole financial picture is almost three pieces, with client, bookkeeper, and CPA. And I really kind of look at the bookkeeper as more so a liaison, and almost like somebody that the client can directly go to when they're not, because sometimes the CPA and the lingo can be a little overwhelming. So I kind of feel like it's, really almost like a mediator to helping a client understand before they even talk to the CPA.
Yeah, I think that's a great point. So the next question we kind of wanted to go through are what is a common mistake that you see clients making in a bookkeeping file? And so to start, I'm going to go with Heather. Just kind of, again, what are some common mistakes or a common mistake that you see a client making in a bookkeeping file, or when you first get a bookkeeping file, you often see kind of this mistake being done?
So I think a lot of it has to do with personal funds, paying with your own personal funds, and then not having that expense recorded on your income statement. And there are different ways that you can handle it, but the most basic way is to reimburse yourself. And depending upon, if you have a very small amount, say you only have like maybe under $20 a month of personal funds that you're using, however you want to track that depends on how you want to reimburse yourself and your total. So basically, I like to just tell people, keep a track of it, keep your receipts, and then depending upon that, you can, write yourself a check or issue an ACH to yourself. But most important thing is to be very transparent and, ideally have those receipts so that we can, as bookkeepers and CPAs, see that and you don't lose it. So Excel, you can keep a list somewhere, maybe not paper and pen, so it gets lost, but that's the most basic way. Like I said, there's depending upon how you're doing your bookkeeping. Excel spreadsheet, you can have a tab, keep track of it. Or if you're using something more advanced like QuickBooks or Xero.
Yeah, and I think that's so important, especially when I think on the tax side. We see so many clients that come in that, are doing their own bookkeeping and actually missing out on expenses, paying too much in taxes, simply because they're not paying attention to some things that may be personal, be using personally or not recording on the books. So, you can actually, by not doing bookkeeping on a regular basis and also not factoring in some of these other side items, be paying more in taxes than is even necessary, just because of that one fact.
Yeah, for
Daud,
sure.
kind of same question to you. What is a common mistake that you see clients making in a bookkeeping file?
Yeah, so one of a common mistake I see is how they're billing their expenses to clients. So if we're working with lawyers, I think one good thing that lawyers want to see is, hey, we're paying these legal fees, we're paying these expenses on behalf of our client. Or if we're dealing with an electrician, sometimes they're going to want to see some of their expenses, such as, hey, we purchased this cable and we need to bill this to a client. So how we do that is we don't necessarily want to code that to the revenue or the sales line item. We want to see that separately. The reason why we want to do that is because as a bookkeeper or as an owner, you want to have as much data as possible, and having your sales and your cost of goods sold or your billable expenses all in one line item, it's going to be hard to differentiate, how much money did I make this year in revenue versus, how much did I make, but how much did I bill? You want to keep those things separately just to have as much data as possible. Like I said, as a manager, you're going to want to make a lot of decisions with these financial statements, and keeping your data pure and separating just those two pieces is going to help you out.
Yeah, I think that's a great point. And that's another thing that we talk about, or that we talked about in this series, is that, you want to make sure that you're categorizing things correctly. Because if you accidentally, categorize, let's say, a rent payment into consulting expense or something like that, and you're trying to analyze your statements, you're gonna notice that things are done correctly. So, obviously that's just kind of a mistake. And what you're discussing is more just where you're putting things and making sure it's in the right kind of section of an income statement.
Absolutely.
And Chris, same question to you. What's a common mistake that you often see clients doing in a bookkeeping file?
A lot of it is consistency, meaning a lot of times it's a learning process. So a client will learn something new where they'll go, oh, okay, I miscategorized this one expense and I need to start reallocating it, but they don't go back and change the prior allocations. So when you get their books, you may see, this is a very, really not a great example, but you may see Amazon purchases that are sitting in office expenses, and then they went, oh, wait a minute, or office supplies. I use a lot of my Amazon purchases for computer expenses, and I'll start booking them there, but they don't necessarily go back and change the prior. So you have things all over the place, and then sometimes it's just a memory issue of, oh, that's right, I forgot to change that. So basically it's just consistency when an error is fixed and corrected.
Yeah, that's a good point. And we see that a lot, where you'll see the same type of payee, the same type of expense kind of wrapped into a bunch of different accounts. And so a lot of times if we're bringing on a bookkeeping file or trying to catch someone up, it makes it difficult for us because we're not sure, what that Amazon is for. Is it always for one specific item? Can it be for separate, different types of expenses, which oftentimes happens, but kind of creating that consistency and then going back and changing if you do have a change of heart or change of mind of where things should be. So as part of this, we also had some clients send in some questions, and we actually answered, some of those questions within the actual mistakes we saw. So I think that that's a good point. But just to kind of reiterate and go through one of those questions we said is, client asked a listener asked a question. I'm paying for materials or expenses on behalf of a client. How do I record this? And Daud, I think this is really what you were touching on is do we record that as, an offset to sales? Should we create a cost of goods sold account, and kind of where do we go there? So I think you answered your question, but I just wanted to say that was funny that we had a listener ask the same question.
Yeah. So, that's pretty funny. So what you're going to want to do is you're not going to want to code that to your operating expenses. You're going to want to code that to your cost of goods sold. And the difference between cost of goods sold and your operating expenses, now your operating expenses are mainly just going to be things like overhead, payroll, you bought some supplies, or maybe you're paying for gas for your vehicle. And then your cost of goods sold is what's directly affecting your revenue. It's, I need to spend this money to make this money. So you need to spend money on cables to service a client and put their power line together. So I think that's the best way of seeing it. So you want to create a cost of goods sold line item, and you can detail it either way, but just make sure it's sitting in the cost of goods sold section rather than the operating expenses section.
Yeah, I always say the cost of goods sold to me is something that you can't have cost of goods sold without a sale. So you can have wages, you can have rent, you can have utilities, consulting services, you can have all of that without a sale, but you can't have a cost of goods sold without a sale. So you can't buy wire and take an expense for it if you're not selling wire. And so that's kind of the way that I think about a cost of goods sold. And Heather, kind of similar question to you is, how do I record business expenses I paid with my personal funds? And, I think you mentioned that, setting up a reimbursement of some sort. And I think, one thing we've talked about in previous episodes, and it's probably dated a little bit and we should probably refresh it, coming here at the end of the year, but we've talked about an accountable plan too. And so that's more so if you're sitting as like an S corporation or set up as an S corporation. Basically, it's essentially what Heather was saying. It's just an accountable plan is a fancy word for reimbursement. And so it's a way to reimburse yourself. You put a file, you sign a piece of document that you put in your company files that says, here's the accountable plan, here's the parameters on why we use it. And then you use that accountable plan to reimburse yourself for expenses that you paid personally. And so, when I see this question, a lot of times I say, if it's 100% business related item, I always say, run that through the business. Don't worry about, running on your personal side. But obviously sometimes there's going to be times where you do have a personal expense or a business expense that you pay for personally, or you have a mix. So like a mix might be a home office or a vehicle that you use somewhat for personal and you use somewhat for business. And so those when we're thinking of that, how do we record that in the books? I think there's two things we have to think about. One, if we're putting it 100% in the business, that means that we need to break out that personal piece. So if we have a cell phone bill that's 80% business and we're running that through the business, we need to make sure that 80% of it we take as a telephone expense or utilities expense, but that other 20% we're breaking out as an owner's draw or something like that. Or if we're paying for that cell phone bill personally, we want to make sure that we're getting a business expense for that. And that's exactly kind of what Heather was talking about earlier, is that, making sure you're either reimbursing yourself, whether that's through an accountable plan or an owner's contribution or whatever it might be, just to make sure that we're getting that expense on the books and not, again, paying too much in tax and not taking advantage of the actual spending we're doing. Another question that came in, I think this would be good to kind of just hear from everybody on this one, but I'm going to start with you, Chris, is, what is something, so the listener asks, what is something that I can do on my end as a client to make the bookkeeper's life easier? And what is something I can do on my end that would make your life easier and as well as make me, the client's life easier, because it's less involvement required from you?
I would say, well, kind of two things. Really, it's don't wait and communicate. And what I mean by that is, if you have something that you're unsure of, don't hesitate to ask, or don't hesitate to send an email to the bookkeeper. Even if you think it's something where you're kind of going, oh, I feel really silly in asking this question, but I'm not sure, because that just makes our lives a little easier, because we can kind of differentiate to go, oh no, that's something that we will definitely need, versus, kind of don't worry about it, or that's something that you should bring to your CPA on the personal side. And then also, if you have a move like you open up a credit card or just something like that, just communicate that information right away. So it's kind of, once it happens, it doesn't happen and you forget about it, because that may be something that we're going to need. So really, don't wait, communicate.
Yeah, I love that. And communication is key. We see that a lot of times where someone gets a new credit card and they've been using this credit card for 3 months and we have no clue about it. And so that obviously has a big impact on their financials. So that whole idea of just communicating. And so I think not only does that help make the bookkeeper's life easier, but it also helps make the client's life easier, because now we're not having to go back, or, let's say we have a credit card that's 3 months old and now we're asking questions from 3 months ago. That's hard on the client to try to figure out what was being spent on then. So yeah, I love that. Daud, anything on that, kind of what can a client do to make your life easier as a bookkeeper, or, what can they do to help you make their life easier on the client end?
Yeah, I really love Chris's point about communication. I have a client who literally communicates everything before he even makes a decision. That way I can kind of guide him through what he should do. But one important thing I think that we would need is our logins. It sounds really simple, but logins can really save both of our lives. That way I don't have to, I'm not like emailing you, 10 times for a statement. And that way you're not worrying about sending over a statement. We like to really take the worry off of our clients' hands and really just do the work and present the product. And we'd hate to worry you guys about any of the bookkeeping work. So I think that's one big thing. Logins are a pretty powerful thing, and we like to share them in as an authorized user. That way, you're secured, we're secured, and that information is going to be crucial to sending over accurate and verified bank account amounts on the balance sheet, and really making sure your account is all the way up to date. And I think that works with logins, work with asset purchases. It works with loans, anything you're financing. As it works with Shopify and PayPal, like any login that might affect your financials are really going to help us as bookkeepers to provide you with accurate quarterlies and monthlies.
Yeah, I think that's a great point too, especially because the more that we can just log in and grab the data we need without having to ask the client to go ahead and do that, one, it makes us, a bookkeeper's life easier. We can just jump right in there and do it. And then the client also doesn't have to be gathering all these documents and constantly forwarding stuff over. We just have full access to this stuff. And so that's a big thing is, clients of JETRO, we always say we prefer to have a read-only or accountant access to bank accounts, credit cards, loans, whatever you have, so we can grab statements, check everything. We don't need to bother you for that. Now, some clients say, my bank doesn't allow that, or there's not a workaround for that, and that's fine too. We just always tell clients, just know that that means that we do have to request things from you, and so that's going to put a little bit more legwork on your end. We're in a perfect world. As bookkeepers, our goal is to say, we want to bother you as least amount as possible, hopefully never, and just be able to provide statements and financials for you without you having to worry about, getting stuff over to us or having to spend time in that area. And so logins really kind of help in that point. Heather, same question to you. What is something that a client can do to make your life easier or to make their life easier by providing you with something?
So it kind of builds off of what Chris was saying, was communication. But for me personally, I think communicating about when you use company funds for personal expenses, because if you don't communicate to us, we don't know, and we assume that like this is a business account, you're only using it for business activities. But people, it happens a lot, and as long as you communicate to us that, we can take care of it. It's not a big issue. I mean, in a perfect world, that never happens, but the world is not perfect, and it happens quite often. But just sending a quick email, hey, FYI, this transaction on this date for this amount is personal. We can take care of that. So like Chris is saying, communication is really, really a big part of it.
Yeah, I think that's a good point too. And we talked before about having paying for business items personally and not reimbursing yourself and then losing track and then losing that deduction. On the same note, if you're commingling or putting business expenses with personal items, that can cause just as big of a problem on the business side, where you're taking too much expenses, which could lead to an audit or something like that down the road. So I think that's a good point. And, just to follow up on this question, is one more item is that, having receipts or having a place where you can upload receipts. So with our clients, we use a cloud software called JETRO for a lot of our clients, and they have a software called HubDoc that pairs with it. And with HubDoc, it comes with an app where you can just take a picture of a receipt, put the business purpose on it and upload it right there. So that also helps with a lot of that questioning part, that if you go to Walmart and spend $2,000 at Walmart, we can see a receipt that you uploaded, and it tells us, oh, you bought, 100 cases of water and some other things for the office, or no, you bought a computer. And that uploading of receipts and providing that information to us allows us to just record that. One, we can record it without having to bother you, and two, we now have a picture or something to back up that expense should it ever become an issue down the road with IRS or state agencies. So that's really kind of the questions that we had today. And again, this is the final kind of addition to our All About Bookkeeping series. And I really wanted to get some of our staff on to give some insights and to have you feel and hear it, directly from the source of the bookkeepers and kind of what activities going on their end. So Chris, Daud, and Heather, I just want to thank you guys for jumping on, and all the listeners, thank you for listening, and we will see you guys next week. Now, one last thing before I go. Don't forget to check out our podcast website at www.jetrotax.com. Simply click resources and then podcast, where you can go there and check out our past episodes. Also, don't forget to join our free bookkeeping training program and free Facebook group. I've provided links to both of these in the show notes below.
This has been another episode of the Small Business Tax Savings Podcast from the team at JETRO. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.